This business about Goldbach levels.
In this trading strategy teaching, I'm going to show you how you could have used Goldbach in order to buy NVIDIA at $100 as a low risk buy. Now, this is the 1 month chart for NVIDIA. And as you can see, price is currently at 887. Let me show you how everything, Forex, crypto, commodities, and even single stock respects Goldbach and how you can get into some fantastic trades. Now, I've demonstrated this using Tesla. I've demonstrated this using Bitcoin. So have a look at my Bitcoin video from 4 months ago, where when price was below 40,000, I predicted the pump, and we're currently at 67,000, right? And I obviously do it on Forex. I do it on futures. I break down ICT's trades again and again and again to show you how he's using Goldbach. Let me show you how you could have put in a low risk buy on NVIDIA and easily had a 4x trade at the very least. Now, first, some Goldbach theory. Goldbach defines exactly how the markets price assets, and for single stocks, it defines the dealing ranges and also how those dealing ranges expand as price breaks through boundaries. Now, it's purely based off of an algorithm. The algorithm will tell you exactly where price is going to retrace to and where the next dealing range high is. So, some background theory. Goldbach is based on the power of three numbers. Power of three numbers are, to begin with, based off of Tesla vortex theory. So the numbers that we are interested in are 3, 9, 27, 81, 2, 4, 3, 7, 7, 2, 9, 2, 1, 8, 7. Okay, so now let's think about how Goldbach operates. Now, in order to price this, I'm going to be using a custom Goldbach tool. Okay, you can create this yourselves. These are the Goldbach levels. So normally, when we use the indicator, and the indicator that I really like is the AMD Power of Three Goldbach levels indicator. So normally when we use the indicator, we define the power of three number we want to use. 3, 9, so these are the same numbers, you see? 3, 9, 27, 81, 2, 4, 3, 7, 2, 9, 2, 1, 8, 7, and so forth. However, a lot of indicators have not caught up to my teachings yet on exactly how stock works. So instead, what you can do is you can create your own Goldbach fib. Okay. Now, have a look at my previous videos, especially the introduction to Goldbach, so I don't have to go through everything again. But essentially what I'm doing is, instead of relying on the indicator to create the dealing range for me, and then also the partitions within it, I have created a fib, which does it for me. So when it comes to these Goldbach partitions, what you know is 0 is the low of the dealing range, 1 is the high. The order block will form between the 3 and the 11. The rejection block will be below that, 0 to 3. Above the order block, you have the fair value gap. The liquidity void will happen here. Breaker block, mitigation block, the opposite mitigation block, liquidity void, bearish breaker, bearish fair value gap, bearish order block, bearish rejection block, and then the high. Okay, so this is how I'm going to show you how stock works. Now, what you have to understand is price, when it comes to stock, respects dealing ranges until that dealing range is broken. So within all stock, the minimum price is always 0. And I'm going to start the story halfway through. I'm not going to start from the beginning, otherwise this video will be too long. But let's go back to price when it was below $81. Okay. So when price was between 0 and $81, this was the dealing range. Okay. Between 0 and 81. As soon as price broke through 81, the dealing range high became the next power of three number up. the 243. Okay, so the dealing range low is now 0 and the high is 243. Let me mark that out for you. Okay, this is now 243. So then once price broke above 243, the next dealing range high is 729. And this is where we will start our story. So let me mark that out for you. So the fact that price broke through $243 at the end of 2021, we then knew that the dealing range, as defined by Goldbach, it was referencing was between 0 and 729. So let me just draw the high of the dealing range. Now, how does this help us? Okay, if you have seen my videos before, you know that there are a number of Goldbach algorithms. One of them that is the easiest to spot is called algorithm 2. Algorithm 2 goes rejection block, breaker block, it retraces to the fair value gap, and then it terminates at the opposing order block. Okay, if you look at this carefully, this is essentially the 2022 ICT YouTube model. I have a whole video on that model within this YouTube channel and how you can use algorithm 2 to be a lot more precise, especially when it comes to the OTE model. So there's a video where I talk about the OTE model and I break it down and show you how it's actually algo 2. Okay, how do we use this information? Once we know what the correct dealing range is, we then know where the right fair value gap is and where we're supposed to enter. So let me use my dynamic fib. So the low would be 0 and the high would be 729. Okay, that's the dealing range. Once we broke through 243, the next dealing range high is 729. Now let me just make sure these numbers are accurate. Okay, so the low is 0 and the high is 729. Now let's, as we are on some pretty high power of 3 numbers, let's increase the time frame that we're looking at. Okay, this is now the 6-month chart. Let's break this down. I'm going to remove the lines that we have spoken about to clarify things. And let's just move this fib back so we can start to understand what we have here. Now these Goldbach partitions, when you draw a dynamic fib, and I'll show you my settings so then you can create the same thing. Okay, these are my settings. Okay, to screenshot this. 0 is the low, 1 is the high. These are the extensions. Now, if you want to learn more about Goldbach, there's a link to the official Goldbach book in the description to this video. If you would like to join my mentorship program, where I combine time and price for my golden bullet model, then you can have a look at the link in the description to this video. You will more than likely have to join my waitlist because there are a number of people on the group already, chartered members mostly of my program. As soon as one person leaves, if someone leaves my mentorship, I allow the person at the top of the waitlist to join. That way I can keep the numbers manageable. I can focus on my trading while also giving everyone a very personal mentorship service. Now, so take a picture of this and then create your own Goldbach fib if you are trading stock. Now, what do we know about these partitions? We know that this is the rejection block. Okay. This is the order block level. This is the fair value gap, liquidity void. This is the breaker level. Okay, and bear in mind our algo 2. So what do we have here? We have a down close candle in the order block partition. This is your order block. Okay. What do we have here? We have a fair value gap in the fair value gap partition. There's your fair value gap. Where did we retrace from? If you ignore the wicks and just look at the bodies, see how the body respected the breaker level. This is the breaker. So we had, let's say, rejection block, breaker, fair value gap, and then price took off right through the high. So what you could have done very easily is you could have put on your long in this fair value gap. You could have had your stop at 0 if you really wanted to. Obviously you wouldn't have your stop at 0. You probably have your stop below the fair value gap candle. Okay. And then you could have taken it off at the opposite order block, which would be here, because this is the rejection block, this is the bearish order block. You would only have really put on the trade after we started retracing from the breaker. This would have given you an entry of $115. You would have TP'd at $648. That's a 7.56R return. 700% you would have made on that trade. Okay, so that's the first trade you could have taken. Now, once price broke above 729, what did we have? We had a range expansion. So the next high is now 2187. So let's clear this up. Okay, now let's think about what is the next dealing range high. So we have broken past 729. So the next high is 2187. This is now the logical high or the target of NVIDIA. If it keeps pumping, this is what we're going to. Let us draw out our Goldbach dealing range now. It will be from 0 to 2187. Let's make sure the numbers are correct. 0, 2187. Okay, what do we have here? So there's your now new order block in the order block level. And what do we have? You have a fair value gap again in the right place, a fair value gap partition. If you are still bullish on NVIDIA, where is the logical place to take trades, knowing that algo 2 goes rejection block, breaker, fair value gap? Okay, this is the breaker. Order block, fair value gap, liquidity void, breaker. This will be your logical trade. Now, I'm not saying price is going to give us that, but there's a lot of time for a retracement. So here is your fair value gap. And if you are looking to put on a long, then you could very easily do something like this. And where would you TP as your swing long? At the opposing order block, the bearish order block. Now, this is not a financial advice, but you can start to see how Goldbach is pricing all assets. You will see how I did this for gold. It's slightly different for gold because it's a commodity. You use partition dynamic fibs, but stock is always like this. So if you look at Tesla, my Tesla video, we did exactly the same analysis for Tesla. Now, in terms of the optimal trade entry, how does that work? How does that fit in? Have a look at my full video, but I'll just give you the brief overview. Optimal trade entry. If we take it from the 0, we know we're looking for a retracement from the breaker. Let's use my old fib that I don't use anymore. OTE. Okay, where is the 618 to the 705? It's in the fair value gap, as defined by Goldbach. Now, when it comes to the OTE, you don't know where the retracement is going to go from. And you don't know where to pin your low. Goldbach tells you. Goldbach tells you that the low of the dealing range is here at 0. And it tells you the retracement should be from around the breaker level. That's how you know about OTEs also. Have a look at my OTE video. If you would like to join my private mentorship group where I teach you how to use time and price in order to trade my personal strategy, which is the golden bullet, there's a link to the waitlist below. And if you would like to get a copy of Hoppy's official Goldbach book, there's a link to the book in the description also.